Welcome to this analysis by Corporate Lab. Let's get right into it.
Today, we're decoding the architectural blueprint of TSMC's blockbuster Q2 2026 results. The big question we're tackling is this: is the turnaround gaining real traction? And just how strong is the structural integrity of this massive AI supercycle we're in? We are going to rely strictly on the data today, breaking down the financials, earnings calls, and market commentary to see exactly what's happening beneath the surface of the world's most indispensable semiconductor foundry. Here's the agenda for this explainer. 1. The facade, looking at headline results. 2. The foundation, covering the core drivers. 3. Building inspection, reviewing the market reaction. 4. Stress testing, diving into structural risks. And 5. Looking ahead to strategic indicators.
Section 1. The facade. Headline results. Let's look at the sheer scale of this quarter, marking a clear transition into a sustained AI-driven expansion. The absolute magnitude of this top-line beat is just striking. TSMC reported consolidated revenue of $40.2 billion. That didn't just beat estimates, it hit the absolute ceiling of their own guidance. Think about this. Compared to Q2 of 2025, when revenue sat at around $30 billion, TSMC has added an incredible $10 billion in quarterly revenue in a single 12-month cycle. Diluted earnings per share came in super strong at 27.25 new Taiwan dollars, comfortably crushing the consensus of 24.29. This kind of scaling, it completely underscores the inelastic demand for high-performance silicon right now.
But here's the crazy part. Look at what happened to their profitability as that revenue scaled. Gross margins didn't just hold steady, they exploded by 910 basis points year over year, landing at 67.7%. That completely bypassed both internal guidance and analyst expectations. The data shows this expansion is a direct result of incredibly high capacity utilization across their advanced nodes, especially the maturation of the 3nm and 5nm families. Couple that with aggressive cost improvement efforts, and they've successfully fought off global manufacturing inflation.
Moving to Section 2, the foundation, core drivers, and architecture. Let's pop the hood on these record-breaking metrics.
The Q2 2026 revenue mix proves that TSMC's value creation engine has been permanently redefined. Historically, we thought of TSMC as heavily reliant on the smartphone cycle. But high-performance computing, or HPC, now entirely dominates at 66% of total revenue, growing 20% sequentially. Meanwhile, smartphones are down to just 22%, IoT is at 5%, and automotive at 4%. This AI supercycle has permanently re-architected exactly where TSMC's growth is coming from. This financial powerhouse is built on extreme technological gatekeeping. There's an incredible concentration in advanced nodes, which we define as 7nm and below. These now make up a whopping 77% of total wafer revenue. Breaking that down, 5nm leads at 33%, followed closely by 3nm at 30%, and 7nm at 11%. But the real wildcard here is the highly anticipated 2nm process. It's already contributing 3% of total wafer revenue. Demand for these leading-edge nodes is vastly outpacing supply, which basically reinforces TSMC's structural moat against any competitors.
This underlying demand builds a rock-solid financial foundation. Operations supported an enormous $15.7 billion in capital expenditure for this quarter alone. Plus, they ended the quarter sitting on a massive cash and marketable securities pile of roughly $110 billion. The sheer cash generation from their operations means they can completely self-fund this unprecedented era of capacity expansion, all while still bumping up their cash dividend to shareholders by 33% year over year.
Section 3. Building inspection. Market reaction. So with near-flawless execution, how did the market process this pristine blueprint?
Well, we saw a pretty fascinating juxtaposition play out. On one hand, you've got blockbuster fundamentals, record margins, a massive EPS beat. On the other hand, immediate market stress. The stock actually dipped more than 4% in pre-market trading right after the release. Why? Market strategists note that investors were forced to balance these brilliant numbers against shifting sector valuations, broader chip stock volatility, and rising geopolitical noise around trade agreements and U.S.-Taiwan dynamics. The conversation instantly shifted from, wow, are the earnings good, to, wait, how much of this is already priced in?
The bulls, however, anchor firmly on management's unwavering confidence. CEO C.C. Wei explicitly stated they are building several more fabs for 2nm and below to, quote, support the strong multi-year demand from our leading U.S. customers. For optimists,
The fact that TSMC sees absolutely no bottlenecks to capacity expansion and views demand as a structural multi-year trend, that entirely validates the current valuation of the semiconductor space.
Section 4. Stress testing, structural fragilities, and skepticism. We must impartially explore what the bears are cautioning here.
Critics argue there are some distinct structural fragilities to keep an eye on. First up is the looming debate over AI return on investment. Skeptics question whether hyperscalers, think Amazon, Meta, Google, will actually generate sustainable ROI from the hundreds of billions they are pouring into AI infrastructure. Because if they don't, we could see a harsh contraction in GPU orders by 2027, leaving TSMC with a bunch of very expensive, underutilized capacity. Second, there's the mathematical reality of pushing the technology forward. Management openly noted that the steep ramp-up of the 2-nanometer node will heavily dilute gross margins by roughly 3 to 4% in the coming quarters, just as depreciation hits the income statement. And finally, geographic diversification is really expensive. Expanding into the US and other overseas fabs is expected to cause an additional margin dilution of 2 to 3% initially, which could even widen to 3 to 4% in later stages.
Section 5. Looking ahead. Strategic indicators. Let's map out exactly what metrics analysts will be watching.
Management's guidance outlines another incredibly strong quarter ahead. They're projecting sequential revenue bumps, targeting between $44.6 billion and $45.8 billion for Q3. But you can see those structural fragilities we just talked about actively being priced in. Gross margins are projected to temper slightly to between 65 and 67%, while operating margins are guided between 56 and 58%. You can bet the market will be watching these margins like a hawk, looking to see if yield improvements can outpace the dilution costs of that 2-nanometer ramp and the overseas expansion.
Finally, the ultimate indicator of management's conviction is their capital expenditure. TSMC announced a massive upward revision of their 2026 capital budget to between $60 billion and $64 billion. And get this, 70 to 80% of that is allocated purely to advanced process technologies. As their CFO noted, a higher level of CapEx is always correlated to higher growth opportunities in the following years. This $64 billion budget, it's a definitive, unblinking bet on the permanence of the AI megatrend.
So this leaves us with a critical, overarching question to ponder as we monitor TSMC's execution over the next 12 months. Is this unprecedented capital expansion the unshakable bedrock of a new digital era, a true Foundry 2.0? Or are we witnessing the absolute peak of an AI spending cycle that might lead to a temporary capacity glut down the road? The data proves TSMC is executing flawlessly today, but with the massive capital bets they're placing, the stakes for global technology have literally never been higher.
Please remember, this explainer represents independent research and analysis built entirely from primary source data, earnings transcripts, and analyst commentary. It is for informational and educational purposes only and is absolutely not investment advice. Thank you for joining us as we explored the blueprint of TSMC's Q2 2026 results. Keep watching the data, and we'll see you in the next analysis.